So today we're going to talk about why we see bubbles form and then they crash. So what is the thought process or the activity that happens beyond in that space? It is basically a cycle: under ownership to over ownership and then back to under ownership. It is a cycle from undervalue to overvalue to again undervalue, and it is a cycle of liquidity not flowing towards a particular sector of or stocks, flowing towards it and then coming out of it. And when we see this over a period of time, during that phase, when the market is building that bubble up, it is very difficult to say how long it will go and at what point will it really collapse on itself. Something external will trigger it, and suddenly all the stories that were looking so good till yesterday will not look so good at that point. Another way to sort of look at these kind of buildups is to see if any sector is predominantly accounting for a significant part of a large diversified index. So for instance, in this case, the S&P 500, the semiconductor stocks there are roughly 11% of the S&P 500. So semiconductor stocks have been rising like anything. And a long-term average has been earlier in the decades of 70s, and it is near 1.5%. More recently, between 3 and 4%. But this sudden move up is causing concerns because this kind of a sudden move up also resulted in a dot-com bust, which took 2 decades for the Nasdaq to really come back to where it was at the beginning of year 2000. So this is currently a situation where we are prone to a major disaster. This is for sure. Right now, everything is looking great. Nvidia is looking great. All semiconductor others, EMSE, everything is looking great. However, promoters in those companies are selling their own stock like nobody's business because they also realize that this is extremely overextended. The institutions, the public are still very gung ho about the prospects going forward. So Nvidia by itself is becoming larger than some countries now. Nvidia is more than $4 trillion worth of market cap and more. So we are coming nearer and nearer to some kind of a debacle. And that debacle, even if it happens in semiconductor stocks or certain sectors, is going to take the entire market down with it. So the idea here is to be alert about such formations in the market and try to protect yourself by planning for it. What if there's a global meltdown? Am I properly asset allocated? Am I reasonably well diversified? Do I have my emergency money out? Am I overexposed? Am I over leveraged? All those kind of decision making can be done while the boom is still on. So let me know your thoughts on this subject. I look forward to your comments and I'll see you in the next one.